We're going to bring in Scott Wren. He's Wells Fargo Investment Institute Senior Global Equity Strategist. And Scott, what do you make of what Jared was just talking about, some of this rotation that we're seeing? We saw a big pullback in tech over the last couple of weeks. The cyclical value names getting some interest here from investors. How are you reading the activity over the past couple of weeks?
Well, Sean, I think that if you look from the March 23rd lows into the recent highs, which was on September the 2nd, the NASDAQ was up about 76% and the S&P 500 was up about 62%. And we had very, very few stumbles along the way. When you consider that the S&P over the last 80 years has averaged a 10% pullback, say every 10 and a half or 11 months. I mean, this kind of activity should be expected. We're still up a lot. Clearly, as Jared had mentioned, there's certain stocks that have really run hard here. So I think that some of the rotation that we're seeing, let's say, and this is not just over the last few weeks, a little bit longer than that, where the equal weighted S&P 500 performed better against the S&P 500. The rising tide tends to lift all boats early in a cycle. The Russell 2000 has been doing better. So some of the sectors that we're keeping an eye on, I mean, we've been in tech and discretionary and communication services and all of that, but industrials tend to be an outperformer a little bit earlier in the cycle. Materials and energy really are more late cycle performers. You need a pretty good growing global economy. You need some inflation. We don't have any of that. We don't think it's going to happen anytime soon. But industrials are one that we're definitely keeping our eye on. And I think you're going to continue to see more of this rotation. And it's going to be, two steps forward, a step back, that type of thing, because we've run so far. We've got the election. We have the virus, we have stimulus, we have all those kinds of things to think about. So I think traders taking a little bit of money off the table makes a little bit of sense to me anyway.
Yes, Scott, seems like you think we're going to see a little bit more of this back and forth just in terms of the leadership and the rotation from growth in tech into more cyclical areas and then vice versa. But what do you think? I know you laid out just in terms of what we would need to see in order for more of a prolonged period of this value rotation, but just in terms of the timeline, you've mentioned all these uncertainties that we have right now and its potential impact on the market. Is this a permanent rotation that you don't see happening maybe until sometime in 2021?
I think it's going to be pretty jittery, but what we expect really in the third quarter, clearly we're going to get a good GDP number. I mean, we've been looking for something at 20%, but that may be way too conservative. We think we're going to see a good number in the fourth quarter. And then really our number for 2021 is 3.8% GDP growth. So what I think is going to happen is by the end of this year, it's going to be pretty clear that the economy is moving in a modest, at modest speed in a good direction. It's going to be hard to turn that ship. And that's when I think you'll see the market will probably anticipate it a bit. But I think once we get this vaccine confirmed or multiple vaccines confirmed, once we know who the president's going to be, we'll get a little bit better indication on the employment situation, which has certainly been improving quite a bit. I think that's when you're likely to see more of this evolution take place. It's probably going to carry us forward for a 12 to 24 month period.
Scotty Ness here. Are you expecting to see another stimulus before the elections? And if so, what kind would you want to see? And are you concerned at all that if companies get more help, that this may lead to some lower productivity with some companies and areas?
Well, I tell you, I think we have hotly debated this on the Investment Strategy Committee. I believe we're going to see something before the election, and I think it's probably going to be, it's going to be related towards employment benefit assistance, that type of thing. I think after the election, that's when we're going to see the infrastructure thing and stimulus like that. So I think we're going to see some sort of negotiation here. Will be between the numbers that the Republicans are talking about and what the Democrats are talking about. Speaker Pelosi just, threw out a pretty high number yesterday. We're not going to be there, but I think we're going to see some stimulus. And I think really in terms of productivity, I think you have to look ahead to see some measured productivity growth, which we think is going to happen. But we need to get beyond this uncertainty that we have right here. We need to see some better business spending, and that's really where we're going to see some better productivity. Not in the next 6 months, but probably the next 12 to 24 months.
Scott Wren of Wells Fargo, always great to have you. Have a great weekend.
Thanks, you guys too.